Omega, thanks very much for joining us. There's been a lot of discussion around ESG. What role is green finance going to be playing, do you think, in terms of debt funding going forward?
So by green financing in this context, we're probably talking about green loans and also sustainability linked loans, and they're slightly different. So green loans, where the facility actually finances an asset or development that itself has intrinsic ESG characteristics. And on the other hand, sustainability linked loans, which are where the money can be used for a general purpose, but the borrower is incentivized to meet certain ESG KPIs, usually in return for a margin ratchet. And I suppose many of us in the industry feared that COVID would take over the entire agenda for finance and indeed investment generally, and maybe push ESG criterion and financing down the agenda. But actually, we've seen it really put a spotlight and increasing focus on ESG from a finance perspective. So going forward, I think we're going to continue to see an increasing number of green and sustainability linked loans. So we've seen a fourfold increase of such loans that have been published in the market since 2017. I think we're going to see more of that. We've also seen institutions like Aviva commit to fairly large amounts of money, 1 billion in that case, for specific products, so that a sustainable transition real estate debt product. But it's not just products, it's also the way that lenders are addressing the general underwriting criteria. And ESG has become a factor that all lenders are starting to look at for all of their loans going forward. And so we see that in some cases as a step towards developing specific green finance products. And it's also the case that as a result of that, we'll start to see assets that fail the so-called ESG test struggling to get financing. We've already seen that outside of real estate, assets linked to the steel industry, for example, which is obviously a very carbon intensive industry, not being able to get businesses not being able to get financing that they usually would have been able to achieve as a result of ESG concerns. And I suppose one final concern for lenders is making sure that the covenants that they're crafting, the so-called green covenants, are genuine, substantive and measurable, because obviously they want to avoid a risk of greenwashing. And so we're seeing lenders develop their own standards and or working with ESG rating agencies. But I suppose my view is that ESG in real estate finance is going to be another positive driver for the property industry to improve its sustainability and ESG characteristics. And we all know what a huge contribution the built environment makes to carbon. So that's only a good thing.
Really interesting to see how that trend, particularly for ESG and the financing side, develops. Thanks very much for joining us, Omega.
It's a pleasure.